Well, a very good afternoon, good morning. Welcome to the FX Week Ahead.
Peso watchers, be aware of some remarks from the finance minister.
Apologies. Welcome to the FX Week Ahead live market analysis with myself, Giles Coughlin. A very special welcome to you, especially if I met you last week in Dubai running a two-day seminar. Kashif, very good to have you here. Anand, Jaya, good to have you. Max, Musab, Naha, Philip, Yao, Alejandro, good to have you here. Good to see some familiar faces, and a particular welcome if we met in Dubai last week, which was a really lovely time and had an absolutely great couple of days with folks. Some really good questions, looking at some absolutely crucial key market skills, and very much looking forward to coming today. I'm just grabbing my cat, who's making himself known, and looking forward to getting us ahead and ready for this week. There are some great potential opportunities this week. I'll be explaining to you what they are and how they work. And we've got the first decent opportunity coming up with the US ISM manufacturing data out in 90 minutes. So really looking forward to taking us through that. That would be great, and look forward to running things. If you can just let me know you can see my screen, hear my voice okay. Everything looks like it's working out my end, but if you could just give me a reassurance that you can hear me. You can either use the question box or the Q&A box, and that lets me know that everything is coming through loud and clear. And don't forget, as we look through this market analysis for this week ahead, if there's any questions you have or anything you're unsure of, please do ask me, and don't be in a situation where you are unsure or there's a question you've got and you need some help with. The idea of these webinars is they're going to be practical. Yeah, CN, Gus. Well, I'm an Irishman, CN, so I didn't get a suntan in Dubai. And it doesn't matter how hard I try, my Irish skin just goes a different shade of red. So I've given up and made sure I put my sunscreen on and my sun hat on. And I picked up a little bit of colour by my standards. But I tell you what, I went to the Museum of the Future in Dubai, which is an absolute fantastic museum, and I really thoroughly recommend going. So if you are in Dubai and haven't been, do take a trip. And if you are visiting Dubai at some stage, go and visit the Museum of the Future. But make sure you book tickets. You got to book them a couple of weeks in advance. But really excellent time looking at some of society's big challenges at the moment. Energy crisis, managing food resources for our population, and the museum presents a number of potential solutions. So it's very stimulating, a very excellent time. So really enjoyed that. Right, let's get on to our present challenges here and the now with the financial markets, and let's get totally ready for what's coming. Okay, so first up, we had that Swiss inflation rate up today. Now, what we were looking for here was if this came in below market expectations for the month-on-month reading and the headline, we would if this had come in below sort of 3.2, 3.1%, something like that, then we would have expected some more weakness in the Swiss franc. Remember, the Swiss franc had been showing some strength recently, and let's just look here at the interest rates. You can see and expectations are for 93% chance for a 75 basis point rate hike. Yes, so that's gone down to 78% now after that interest rate, after that inflation print, and the terminal rate has dropped a little bit lower as well after that terminal rate. So a little bit of Swiss franc weakness could be expected, but it's not a tradable opportunity. But if you had to trade something, then you would be looking at something for like pound Swiss franc. Now, pound Swiss franc, CN's just helpfully put in the questions, is that, CN says the more nasty press trusts, got, the more pound rose. Now, last week I was hit left, right and centre by journalists from all over the place, Reuters, different national newspapers, if I remember correctly, loads and loads. I've had some of the most comments I've ever had published in financial media was last week. It was so many, and that was just such a good example of when, you know, how to know when something's like really peak bearishness. Now, I wrote an article today. Let's just see if it is there on my blog. Do check out the blog. This is it. It's Trading Contrary Opinion. And so I published an article today, and this is a really, I've sent it to everyone. Read this article, because sometimes, you see, that's when last week there was maximum pessimism in the pound when all the nuts were shaken out. So there's this good idea. Think about, how do you get nuts out of a tree? Think of it like this. You use a tree shaker machine. It shakes the tree and all the nuts fall down. Leave the tree shaker on and all the nuts are off the tree. So when the fear is enough to shake the tree, the question is, are all the nuts out the tree? Is anyone left to sell? So last week, you know, there was so much bad news that there was just no one left to sell. You know, all the nuts were shaken out of the tree, as it were. So do look at that article for how to trade contrary opinion. There are times when you should go against what people are saying, and that was a good example with the pound. You know, some people talk about, you know, when a currency or a commodity makes the front page of Time magazine. You know what I mean? Something like that. That's kind of like when everyone knows about it. It was quite easy for me because I was bombarded with different journalists contacting me, and then even some of my friends who work with mortgages were contacting me. And I know why they were looking at my LinkedIn profile. I know why, because I was trying to think, what does Giles think about interest rates, right? So that there's been a U-turn this morning from the UK, with the top tax rate that was going to be cut has been reversed. So in other words, a little bit of upside. So we see a little bit of upside in the pound. So that means, and you can see the pound here, it's just got a little bit of upside. Here it is, just a little bit of upside that came up early this morning. And you can see that little shot higher. Pound just trying to hold above this near-term trend line, just trying to make it across this trend line here, just holding that level and trying to, can it make a bit higher? So if you wanted to go long, it is possible to go long at market in the pound US dollar. And in fact, with the US traders just coming on board, you know, you might get a little run higher just ahead of the ISM print. And if you look on the intraday charts, look, you've just got that little, you know what I mean? We've got that little potential break here. So intraday, you could go long, stops just sub 1.180, looking for a run up to 1.1250. That's acceptable today, okay? With that U-turn from the Fed policy, from the Bank of England on the tax rate, and there's a little bit of dollar weakness in the market. The other option would be going like pound Swiss franc long. So if there was any easy way to get in pound Swiss franc, that would make sense today as well. I'll just take a look at just have a look at what I call my charts. Yeah, that big pennant, that's right. And pennants are really lovely for trading, and I really like a nice pennant or a flagpole, something like that. Very nice for trading. You can really easily manage risk. And if you look at the pound Swiss franc, you know, this is wanting to break out, and I'd say, you know, if you had to go for a trade here, let's just drop this down to the 15-minute chart. You know, and you can look for like a break of this very, you know, just breaking that high or breaking that high, so 1.100, and then looking for a run up to 1.1160 could make sense. And stops can be placed just the other side of that very small swing point, just the other side of 1.10200. That's acceptable. So it's basically buy at market, stops just underneath that region there. And that is because the U-turn with the UK. Now, markets will think, okay, if the Bank of England if the UK government is prepared to do a U-turn on its policy, then that's going to be pound positive, right? So that's where we are today after that Swiss inflation data and the UK intervention. So everyone should be with us there. Yeah, big pennant on pounds. Yeah, CN, got it. You know, I've been looking at that. I've been looking at the small ones, the big ones. It's a great point you make. We'll probably have a look at it in a minute as well. ISM data, this is going to be important because remember, at the moment, the Federal Reserve is seen as bringing the terminal rate to 4.8%, and that's slightly lower now from last week. It's down to about 4.44%, which is in line with what Jerome Powell's kind of expecting. But what we want to see here is we want to see a big miss. At the moment, there's 63% chance of a 75 basis point rate hike. That's the most probable outcome. So if we get a big miss in this ISM manufacturing data, then there's going to be less chance of a higher interest rate hike. So that would be dollar weakness. So in other words, that would be pound US dollar upside, silver upside, gold upside against the dollar, and S&P 500. So what I want to see the headline underneath, hang on, not the final, I want this one. I want the manufacturing PMI, I want the headline. I want the headline underneath 50.7. And I want the prices paid coming down as well. I want prices paid underneath 48.5. So if that comes in sub 50.7 and 48.5, I'll be looking for upside the pound, upside silver, upside gold, upside S&P 500. Right? That's what I'm looking for. Now, a couple of things to say. Stocks, European and US equity futures are starting to push a little bit higher now. Now, there was fear over the weekend on that Credit Suisse report that perhaps would Credit Suisse be the new Lehman Brothers. That is overstated, okay? And there's been a number of things going around on Twitter saying that, you know, the Fed's got an emergency meeting on Monday, a closed door meeting. Now, they've been having that closed door meeting for quite a few months now. It's nothing new. So both of those opinions are overstated in my view. So as a consequence, if we see this coming in a big miss, then I look for downside in the dollar, upside in pound US dollar, upside silver, upside gold, upside S&P 500, and you'd also see probably upside in the Dow and the NASDAQ. That's number one to look for. Then we have the RBA interest rate decision coming up. Now, and we have the RBNZ interest rate decision coming up as well. So we've got a busy couple of days. Now, if the RBA interest rate decision, you can see that interest rate markets are expecting it's about 50-50 whether it's a 25 or a 50 basis point rate hike. So there's potential here for markets to be disappointed. If it's like a 25 basis point rate hike only, then we could see a little bit of weakness in the Aussie dollar. But I'm not, this is not a great tradable opportunity in my view. What you really want to look for is a big surprise. So if the interest rates is going to be less important than forward guidance, if the RBA starts talking about, we might be looking at pausing, the current rate is 2.35. So they start talking about pausing and then terminal rate expectations come down. I expect maybe short-term Aussie New Zealand dollar downside. If they sort of maintain their more hawkish stance, I don't see a trade. So I'd only see a trade in shorting the Aussie dollar. Yes, if it was like only a 25 basis point rate hike, but the forward guidance will be more important. Then got Fed speakers that can move the dollar, particularly in line with what happens with the data print today. And then we've got the RBNZ rate decision. Again, not really very tradable. The RBNZ and New Zealand dollar has been very difficult to trade. The best opportunity would come if we got a, say we got a 75 basis point rate hike. That would be definitely more hawkish because the market's only expecting a 50 basis point rate hike. It's 100% priced in, right, for a 50 basis point rate hike. But we're looking at 20% chance of it being 75 basis points. So if it is 75 basis points, I would scalp Aussie New Zealand dollar to the downside, but I wouldn't be holding it because the New Zealand dollar has been quite odd over the last quite a few months. It doesn't always seem to go in line with its fundamentals so clearly. So Only a short-term scalp I'll be looking for the RBNZ, and only if they're more hawkish. So it had to be more hawkish than the market's expecting. I'd be wanting to see a 75 basis points rate hike and more hawkish forward guidance, and I'd look at an Aussie New Zealand dollar sell on that print. Then we have ISM services PMI. Now, markets are expecting that to fall a little bit. So if we have a weak ISM manufacturing PMI today, I expect the dollar to fall into Wednesday's meeting. Now, if the data is a miss, what that does is it means the chance of the Fed being more aggressive is much less likely. So a miss means dollar weakness and upside. So in like the dollar pair. So what we're looking for here is if we get like a very hawkish print from the RBNZ, if they turn more hawkish, and then this is a miss sub 54, then you could look at something like New Zealand US dollar upside and possibly pound euro US dollar upside, but definitely euro US dollar upside. So that's what to look for on Wednesday. Then we've got Fed Bostic speaking. Thursday, lighter day. There is sort of Eurozone, French, German data. I'm not really expecting much from this because like the outlook is very poor in the Eurozone, so it's hard to see if it can get much worse. So a lot of the bad news is priced in for the euro. You know, I think there's hardly anyone who's hawkish or bullish about the euro. It's very, very negative. So that means the market will be much more sensitive to any good news. Okay, if we get anything good, that would be interesting. Yeah, great point from Nahar. OPEC meeting on Wednesday. Now, oil prices have been gaining this morning. Now, I'll just explain what's been going on. You just look at the news feed. Yeah, let's just look at the news feed here. What you'll see. I took a nice long on oil this morning, and I'll show you how I did it. Nice simple trade. A lot of different drivers with oil, and this was what it was a report came very early. Basically, OPEC is discussing oil output cut in excess of 1 million barrels per day, excluding any voluntary cuts. So in other words, that OPEC is looking at cutting supply. Now, if supply is cut, that's bullish for oil. So when I came to oil markets this morning, and you'll see, like this is a really good point, you see the pound just picking up a little bit there. Now, right, let me show you. Now, right, let's have a look here, this chart. I'm not looking at Costco. US oil. No, you're going to like this, CN. I know CN's going to like this one. Get rid of those pivots for a moment. Go down to the hour chart. Right, so this was the hour chart, right? Oil prices gapped higher, and then I'm going to go 15-minute. And then what you saw after oil prices gapped higher was a big kind of like flag structure or a pennant structure. And this is a way to get into a very like a trending market. So if you look here, yeah, was it from this morning? Yeah, it was just this morning. Nice and early. I went down to my breakfast, and I saw the very bullish news. I thought, well, this is bullish for oil, right? And I saw this little like flag pattern. It's when you get an impulsive move to the upside, and then you get this kind of pullback, and you can call it like a flagpole or a pennant, and then you just go with the break to the upside. So I just had my entrance like 82.02, stopped the other side of the structure, and then just moved up. And when I came back from breakfast, I saw my I was at 82.99. I thought, well, I've got to the big round number, I'll just take profit. So there's a really nice example. You've got a little pennant or a flagpole, and they call it a flagpole because, like, if you imagine that's like the pole and that's the flag, and what you're doing, you're looking for a break to the upside in line with the trend, right? Now, could I have held it longer? Possibly, right? But I just saw that. Oh, that's lovely. I'll just take a nice little boost higher in oil. Now, that's all, in my view, that's all priced in now. So what you could do is, if OPEC meet and they don't cut production, then you might see a little bit of downside in oil. So use those pennants and flagpoles. They're really, really good. I was teaching them in Dubai and teaching traders how to deal with that. So, you know what I mean? Good opportunities, good ways of getting into markets sneakily, just using a bit of now, so you can see pound US dollar pushing up even more as we speak. Good, good, good. Where are we? Right. So Naha, well done for you. Do you put any stock in PPP valuation method as one component? CM, what is the PPP valuation method? Just let me know and I'll tell you if I put the stock in it. My gut instinct is I don't think I do. If I'm having to ask what PPP means, I think that probably tells you the answer, but just put it in and I'll let you know. The Thursday, 6th of October, where are we? Okay, Fed speakers, jobless claims. Again, like if that's like a big beat, that's negative for the dollar. So if initial jobless claims come in, above 225, that's more negative for the dollar. But I'm not putting so much data emphasis on this because the jobs data is all going to be NFP on Friday. Now I am putting stock on this. What I'm looking for is the following. If the NFP headline comes in below 200,000, if the participation rate falls, right, and if the average hourly earnings fall, okay, expected to drop from 5.2 to 5.1. So I want to see average hourly earnings below 4.9%, the non-farm payrolls headline below 200,000, and I want to see unemployment rate above 3.8. So if I get unemployment above 3.8, headline below 200,000, watch the revisions as well. I want to see them lower, ideally, or higher in terms of the unemployment. And then I'm looking for dollar weakness. And the trade I'd love to go long silver. Oh, I would really love to go long silver. I'm trying to go long silver, and you can see there's a nice like structure on the weekly chart, which is very, very attractive. All right, you've got this nice sort of false break of Barami inside bar, potentially trying to break out this near-term trend line, but I need a reason to go long silver. The technical is just not enough for me. Technically, it's good. Like, you remember that group that got into that GameStop on Reddit and all those sort of like meme traders? They're getting into silver as well, right? So you could see like silver just suddenly spike higher for randomly no reason. Now, my view is when you get these like crazy like meme stock traders, my view is go with them. Do you know what I mean? And then just get out. So when they're sort of saying, silver's going to go to, $400 an ounce and all this kind of crazy stuff, like don't get sucked into the, my opinion is don't get sucked into the, what they're saying, but like there are a lot of people buying it, so go with it and then just take your profit quickly, right? Just it goes up, you say you got like, $4 or $5 to the upside, just great, take it and walk away. Don't believe the hype is what I'd say there. Canadian employment data, again, this could be good for CAD weakness. We've had a run of weakness in the Canadian jobs data. So the headline is expected to be, where is it? Like 20,000. We've seen 3 readings below 0 in a row for 3 months. So if this comes in but negative again, that'd be the 4th contraction in a long time, 4th contraction in a row rather. And you've got the Bank of Canada, they're expected to raise terminal rate of like 4.172%. They're expected to hike by 64% for a 50 basis point rate hike. Okay, so what that means there is if we get a big miss in the jobs data, it'd be more likely to be 25 basis points. That'd be CAD weakness. So if US jobs happen to be very strong, but the Canadian jobs is very weak, then US dollar CAD upside. And again, like CAD, maybe like if CAD data is really weak, so if you get the unemployment above 5.6%, if you get the participation rate below 64.9, if you get the unemployment rate, rising over, not the US one, if you get the unemployment rate rising above 5.5%, then what you'd be looking for is downside in the CAD. Okay, look near the time to see what currency pair to trade it with. But if US jobs are good and Canadian jobs are weak, US dollar CAD upside is the obvious pair. The other pair to look out for is what's going on with the pound. If the pound keeps picking up, then pound CAD longs would be really good if the pound remains sort of strong and bouncing back, and the Canadian dollar is weak on a very weak CAD print. Oh, purchase power parity. No, it's not something you have to predict change in real interest rates to trade. Zag, yeah, exactly. You do. Same with gold. And if you've got the jobs print moving lower, then you'll have 10-year yields moving lower. So you have real interest rates using lower, and you have the dollar moving lower. So if you've got, and CA raises a good point, it was a key thing that I was teaching when I was in Dubai, is what you're looking for here is the interplay between real yields and gold. So you can see here, real yields, I'm using Treasury Insurance Protected tips as a proxy for real yields. When real yields and the dollar rises, that pushes gold lower. But when you have real yields and the dollar falling, like you had here and here in 2020, then that pushes gold higher. So any sense in which the Fed's going to be pausing or changing interest rates, so a big miss in jobs data would start to push that lower. Again, big miss in inflation would push real interest rates lower as well. So that's what we need to look for. Okay, folks. Are there prince things in Dubai who trade for an occupation? I'm sure there is a member of the Dubai royal family that trade for an occupation. I'm absolutely sure of that. And there's, obviously there's a lot of trading that goes on in Dubai. It's a very trade-friendly place, CN. The whole philosophy and the way that it was established was very pro-business. So I'm sure there would be plenty of people. Yeah, okay. Max, thank you very much. I will be, I will pass on those details. It is, yeah, that is frustrating. This is very time sensitive. So, that's frustrating for you. I'm sorry about that, Max. I will pass that on. If you could contact HYCM as well, and I will contact as well. Folks, thank you all very much. It's been a pleasure, and I hope you have a very good trading week, Max. I will pass those details on, and I will get that to the relevant department. Apologies for your, getting that delayed. I realize how frustrating that is as a trader. That's annoying, and I look forward to seeing you on Wednesday. For those of you who can make the workshop, we'll be digesting couple of things on Wednesday, what the RBNZ rate decision was, what the RBA was, and we'll also be getting ahead for that US services print as well. Take care, everyone. Thank you. Thank you, Yao. Takes care, Max. Look after yourself, everyone. Bye.